welcome you all. I am Sundar from Symphonia Wealth. So what is happening to the market? That's the big question among all investors. So let me try explaining you what is actually worrying the market through this video and what are the positive factors which are also playing out currently. So what is spoiling the entire party to the market is nothing but inflation. We all know that the last 2-3 years has been very tough for the entire world. One, we went through a pandemic and we are still trying to come out. The second, we unfortunately have started having a war between Russia and Ukraine. And because there was pandemic, there was excess liquidity which was pumped into the market. So these were some of the reasons why inflation has come. But the good news is, India is not alone in this inflation race. In fact, India is not the most affected when it comes to inflation. Of course, inflation is pinching every one of us. But if you compare it to some of the other markets, especially US, which is one of the largest market and the most powerful economy in the world, there if you look at the inflation is actually at a 40-year high. They are at about 8.5% inflation, which is never heard of. Normally their inflation has been in the band of about 1 to 2%. Whereas now, in the last about 6-8 months, the inflation actually jumped to about 8.5%, which is actually the most worrisome part. Of course, even in India, the inflation has moved from about 4 to 5% to about 7-8%, which is at an 8-year high. So this is the case with most of the economies. So I have shown you a chart where most of the economies have actually are experiencing very high inflation. Again, the good news is the economists have actually identified the problem of inflation, and most of the economies have already started acting on reducing this inflation effect. One way is by way of pulling out the liquidity which has been excess in the market. The other thing is they are also increasing the interest rate. So even in India we have seen already 2 rate hikes by RBI, which means the cost of money is getting higher. In fact, even in some of our previous video we said that inflation is going to come back, and because of that your EMIs will cost more. The video titled Good News and Bad News actually covered this very detailed. So if you are interested, you can actually click the link below and see that video also. So hopefully, as the federal governments have started acting towards containing inflation, hopefully inflation should get contained in the next couple of quarters. So though it's going to be a short-term pain for all of us, because whenever inflation goes up, the common individual gets impacted. But hopefully the problem of inflation should be behind us in the next couple of quarters, if not more. So the good news is not everything is bad when it comes to India. So the chart which I have shown you here very clearly tells you that the economic activity in India has actually picked up substantially, and we are actually above pre-COVID levels. So this Nomura Business Resumption Index was started, which started tracking the business activity in the economy, fell to as low as 40 during the pandemic period, and from there now if you look at it has actually gone to about 125, which means it is actually about 20-25% above the pre-COVID levels also. Another interesting thing is most of the unorganized sector, with the overall globe opening up and India opening up, the tourists, the schools, all these things have again come back to normalcy, which means a lot of unorganized players, the cab drivers, the people who are running hotels, etc., they've all got back into their business, which means again a lot of employment is also getting created. So even the unorganized players have started contributing back to the economy, so which is a very big positive for India. Also, if you look at the next chart, which clearly shows that the credit growth has started coming in. Credit growth is nothing but the growth rate at which people are borrowing money. So whenever there is hope in the future and whenever you feel that demand is going to be strong, that is when actually companies borrow and set up new capacities. So the credit growth is one major indicator of which shows that the economy is actually coming back to track. So the next chart clearly substantiates that. If you look at the Capex spending in India has actually clearly been increasing over the last couple of months. So this clearly shows that the credit growth is actually getting into the expansion of capacities, which is very good because the business owners feel that the demand is going to be pretty strong in the coming years. Another important data is when it comes to monsoon. I think the IMD has predicted that the monsoon is going to be pretty normal, and as we speak, the last couple of months has been scorching it for Chennai, but we are also experiencing some bit of rain across, and the monsoon has actually started spreading across India, so which is a very good sign when it comes to the economy. So with markets actually started falling for the last about 1 year or so, the markets, the broader markets, the Nifty and Sensex have actually corrected close to about 20%, which means even the valuations have actually become a lot more attractive, and they have actually come to the long-term averages, including your PE and the price to book. Both indicate that the valuations are not very expensive as it used to be a year back. Another good news is, we being in India, we are actually in the world's fastest growing economy, which means even the predictions for the coming years, in spite of the current short-term pain which we are going through, the future GDP projections are actually a lot more healthy compared to the rest of the world. So which makes us strongly believe that though inflation is definitely a worry, but there are other strong positives which are actually supporting the Indian economy. So what should investors be doing at this current point of time? The best sensible option is to actually incrementally add to your investments, either through the SIP route or through the systematic transfer plans, so that you can actually enter at these volatile times and get a very good entry points and also acquire more number of units for the same amount what you invest. Hopefully once all these things get settled down, with the economic recovery pretty strong, people who are investing at these current levels should hopefully make a good return in the next couple of years. So to summarize, though markets in the short term looks very painful, but these are actually very good entry points for somebody who is looking for a long-term investment option. Hope you enjoyed this video and the information provided. Please do subscribe to our YouTube channel, Symphonia Chennai, and please don't forget to press the bell notification icon. Thank you for watching.